Bam, bam. How's it going? How's it going? It is I again on what day is it? Monday. And welcome to M5 Property Addicts, and where we talk anything and everything around real estate and where can you park your money? Where can you invest your money? And we do this together with my boy called Joy. Joy, he's our fund manager. And let me just check out in the background there. Is he there? I think, oh, yes, he is here. Hey, Joe, how's it going, man? Good morning. Good morning.
Hi, TJ, right yourself. It's going very well, thanks. Just a little bit cold over here.
Oh, brother, don't even talk about being cold. It is freezing this side of town.
That's true, eh?
Yeah, I got all my clothes and all my jackets. I'm wearing all of them today.
Man, and
That's how
it's
cold it
only the
is.
start, eh?
Yeah. But Joe, thanks for joining us, man. I know it's cold, but the good thing about money, it doesn't sleep, it doesn't get cold, it's got no feelings. Money needs to be invested somewhere. It needs to be placed in a place where it can work. But a lot of people don't know that. A lot of people are still in the space of they have to go to work for them to make money. What's your views around that, man? Because money can do more for you as an individual.
Yeah, well, TJ, absolutely. It's the truth is that at some stage your money needs to start working for you, and you need to stop working for your money, and you need to get that balance in life to really get ahead. So definitely the easiest way to do it is with property, obviously. Property is golden. You will never hear that statement becoming old.
100%. So for a lot of people that are going to work, are we not saying that going to work is a bad thing? I mean, Joy and I, we still work. Our jobs are slightly differently because me and Joe, we work for assets. Everything that we do is to build assets, and those assets pay us. So we are exchanging our time for buying assets, right? And this is the same thing that we want to talk about, to say how best can people also spend their time in exchanging that for the money that they are getting. But now that they've got the money, how best can they put that money into assets with as little as 50,000 Rand? And with that money, it can then pay them in the future. And that's a handsome payment. It can be done, and that can be for a lifetime, right? And what is it that we're talking about? We're talking about investing whilst you're buying properties. You can do it on your own. We encourage you to do it. But if you cannot do it on your own, are there vehicles? Are there other means that you can do it? And today we want to talk about that, Joe. Isn't that so?
Yeah, absolutely, TJ. 100% there. So, property is quite expensive, and we all know property is the way to do it. But you need to group funds together to be really in a position to buy property. There's a lot of individuals out there that say that they come to the conclusion they'll buy property in a few years from now until they've saved enough to put a deposit down. And what we're actually telling our investors is that we'll group your investments together, and we'll buy the property now so the property can grow for the next few years. You're losing the growth if you save up to only buy it in a few years' time. And anybody out there to operate property, guys, it's not a passive income if you need to manage the tenants and you need to manage the bills on the properties. And that's really where we come in. We make it a passive income because it's only really passive if you're not really doing anything for it. And our fund is set up exactly to do that. So we make it easy for you to become a co-owner in our properties. And that's our goal and that's our mission.
Amazing stuff. So for some of you who don't know, Joe, he is the fund manager of M5 Property Addicts Fund. And Joe, he's the guy who went to school to become a fund manager. So he's got the qualifications. I don't. But between the two of us coming together, we bring you something else that you can do. Even in peak winter like these ones that we are in, you can still invest. And what am I talking about? I'm really talking about where you can invest your money in a secured place where it is underlined by an asset, what we do from an M5 property perspective is that we are all about investing in alternative markets, which is real estate. So if you have never invested in real estate before, this is the place that you can start doing that. And you can start from as low as 50,000. 50,000 allows you to get into the door. However, you can also invest a little bit more than that. And what is the maximum, Joe, that people can invest in?
Well, TJ, it used to be a lot higher than the maximum currently. The maximum is 2.5 million, because there's so many benefits that comes with your investment that the government capped it at 2.5 million, and which is where it's a pity, but it's it is what it is. So it's from 50,000 upwards to 2.5 million, and 2.5 million invested in a great property fund. It's quite a large chunk, but it's definitely worth it.
Someone asked me the other day that as a husband and a wife, so how much should we contribute and what is the maximum? And I said, unfortunately, we see you as individuals, even though you're a couple. They can invest to a maximum of 5 million between the two of them because, SARS sees them as individuals. Was I correct by saying that?
Yeah, absolutely. So SARS, identifies every person as according to the tax income number, and for that reason, it's seen as two investments and not one. But they always say keep money in the family. So if the husband and the wife invest together, even though it's two separate tax entities, it's still part of the household. So they can push it up to 5 million for a household. Definitely possible.
100%. What if we on the same thing, Joe, if we are to mix up a business where this couple actually owns a business, can their business also invest? And what does that mean from a maximum?
Yeah, so businesses can also invest. It's a great tax structure for a business as well, in a way to really, build up assets as well for your business. So it does two things for you. So you're building assets and you in getting rid of your taxable income and you're exchanging that for property. So, but businesses is a little bit lower than the 45% of individuals, which is at 28%. But government has made up for that, seeing that you can invest 5 million per business as a maximum. So they did compensate large businesses and say, listen, we can do up to about 5 million. So it also starts at 50,000 for them, and obviously a maximum of 5 million for those businesses. So and you can split between your personal investments and your business. So if you do the numbers, you can put in 7.5, which is 2.5 million in your personal name and 5 million in your business name. It's possible to do it.
Okay. All right. So Joe, now that we are investing, we know what we are investing. We know how much money one can invest in. What is the minimum? What's the maximum? And now we're going into other things in terms of, so what are you investing in? So if someone else says, hey, so M5 Property Addicts, you're investing in property, but what kind of properties? There's different types of properties out there. There's, we're in the mix of COVID, so hospitals, commercials, in terms of industrial, residential. There's so many properties out there for investing. What is it that M5 Property Addicts, the fund, what is it that they're investing in particular?
Yeah, so what we're investing in and what we specialize in is student accommodation, and that's really a niche part of the market. So niche also always translates to if you're good at what you do, you'll have better returns, and that's why we're focusing on that portion of the market. There's also some little bit of mixed other properties within the portfolio that we allow to go into, but mainly it's hospitality properties, which is student accommodation primarily. Any property that is in the hospitality sector, really.
All right, awesome. So today is a very special day. I think a lot of people might not comprehend that, but today is a very, very special day. It marks a big milestone. And before I jump into that milestone, I just want to jump onto my computer here and ask the people, ladies and gentlemen, if you're joining us for the first time and you've never been here before and you're wondering what are we talking about, me and Joe, we are talking about property investments. We're talking about what you can invest into. Particularly, we're talking about a Section 12J, and this is where you can invest and you can earn some good returns. And out of that, we as M5 Property Addicts, we do have a fund. It is a Section 12J registered. You can come in and invest from a minimum of 50,000. And if you do have any questions, I am going to go through onto the chat and see whether you send in your questions, whatever questions that you've got, and Joy and I will be able to answer it. Let me just say that I will be able to answer it, but if it is a higher grade, it will go to that guy because he wrote the exams. I didn't, right? But if it is also another higher grade, maybe it needs to go to a tax person, Joe, because you're not a tax advisor.
Listen, we've got some tax specialists on standby for everyone. So if it's really one of those questions, guys, we'll get you the right answer very quickly.
100%. Why am I saying that? Jokes aside, do not go to an auntie and ask the questions of investment. She's not qualified, right? Don't go to the uncle so and so because he's a finance what, and ask the questions, is this the right deal for me to invest? Don't do that. You are making a big mistake. Go and investigate people that are qualified to answer such kind of questions. That's why people go through to schools and spend years and years for them to be able to have the right answers for you. So, as I speak right now, I am waiting for your comments. So, wherever you are watching us from, either just say hello. I am watching from ABC, from Purespret, maybe that's where you are, or Dakaville, whatever the place you are from. I won't judge, but I just want to hear where you are. And then the second part is, obviously, if you do have a question, ask the question so that Joy can answer the question. Joe, the significance of today is 31st of I think it was round about the 10th, 12th of February, when the Minister of Finance had an announcement. I think it was on the budget speech. I tend to report the actual date. But it was mid-February when he had this conversation, and the Minister of Finance, he made an announcement that the Section 12J won't be available anymore, right? And we are in what is now called the sunset, right? So sunset just basically means the sun is going down, isn't it?
Yeah, for this government initiative, that's exactly what it means, is that, a government expects to have a large deficit in fiscus when it comes to actually, retrieving, the taxes from individuals and companies in South Africa. And because of that deficit, they said they're anticipating, we can't also pay out rebates, to investors and people in South Africa. So listen, we're gonna stop the initiative at the end of June, which is just around the corner, which means that this is the final month that you can really access this investment opportunity, and that means that sunset clause only means that your benefit will only cease to exist, but the fund will continue to exist even for the next to 100 years. We might even not be here anymore, but the properties will still be, and those properties will generate income. So actually, a sunset clause, it is just an indication that this opportunity is coming to an end in a month's time. To reap your benefits, get your taxes back, because that's what it really is. You're getting your taxes back, and you're getting growth on your capital invested in the properties, which is just, those two combined just give you exceptional sort of returns. And then, so our investors into the future, if they want to top up their investments, they can do so. But then again, they won't receive the tax rebates, but they will still receive the exceptional growth in the property fund. which will pay out on a monthly basis or quarterly basis, will pay out the dividends, which is the rental income in the properties. And that's very important to know, is that that cash flow for investors in their pockets is really what it's all about.
So basically what the minister said is this thing is coming to an end, and you have explained it well for us. And today marks 30 days.
Yeah.
Actually, I don't want to say 30 days. I almost want to say 25 days. Because the 25th of June is going to be on a Friday, which then means that the 26th and the 27th, it's a Saturday and Sunday, you literally have like a day or two for you to clear out all of your paperwork, get all of your money in, which could be too late at that time.
Yeah.
So in my head, I'm really counting the 25th. That's the D-Day, right?
Yeah.
And the 25th, all of your money needs to be in the fund. All of your paperwork needs to be in the fund.
Yeah.
Whether you are going to be taking a loan, whether you are going to be taking whichever way that you're going to be investing alongside of us within the Section 12J, to be 100% sure you want to do it now, right? So ladies and gentlemen, I just want to stress this out. There is an application form that you need to sign, that you need to utilize. In that application form, I've just put it in the chat there. And I also want to stress the fact that this fund is not for everyone who's got money. So you might have some money, but if you do not meet the criteria in terms of investing with us, we are going to decline you. So we are only taking those people that, obviously based on your answers, we will say that we can invest with you. The money needs to be clean. We need to know where the money is coming from. We need to know who you are, because obviously we report back. But over and above that, we're also an FSB. Just like if you had to go through to any bank, you go through to any bank with about 1 million in your bag, they're gonna send you at the back. There's a procedure for that. They will call in the relevant authorities on you. So we're not different. We are the same. We do report the same big brothers, and we want to make sure that obviously everything that we're doing is above board. So which then means that if you don't qualify on the application, you will not hear from us. No, it's not that. We will call you. We will tell you that no, we're very sorry that you cannot get through. But you have literally 25 days. Right? Yes, it is 30 days to be exact. You still have the whole of June to do this. But after that, it will be no more. The SARS benefit will be gone. It is a sad opportunity that some of you are not going to be investing, because this is an opportunity that you're going to miss. Joe, I don't want to miss anyone. Like literally, I don't want to miss anybody. I think this is a greater opportunity of people creating generational wealth, people creating a legacy for themselves. Why do I say that? Why do I say that this has a component of creating generational wealth? Well, you grew up working. Your father used to work. Probably your grandfather used to work. This can change that story, because you can now start having assets that pay you. If you invest correctly, the child might not have to go to work for the purposes of they have to go to work. They will go to work because they want to go to work. They're working from passion. They can be a musician, they can be whatever that they need to do, without having to worry about the bottom part of how do I put food on the table. And you went through the same process. So don't let the next generation of your life be the same. Invest in assets. If it's not investing with us, invest in assets that you own. But if you can't do it on your own, come alongside of us. We'll do it for you in a passive way. Joe, whilst I'm talking about that, the properties that we are investing in, where are they? Can people come and see? How does it work?
Yeah, so TJ, yeah, good question. So what we're looking to do is that, we have one of the few funds that an individual can contact us directly, and they come and visit us, and we'll take them to the properties that we've bought already. We'll take them to the properties that we've signed contracts for, that we're in process of buying. We'll let them speak to the tenants, and have an open conversation. Are they satisfied tenants? Are we doing a good job at managing them? So we're very transparent and we're very open. And those properties we only go for properties that is located in a very specific area, for the reason that there will be no other property that you can replace in that. They only made so much ground. When God made earth, there was only a certain amount that was given, and we're really looking for that special properties around universities, and also special properties when it comes to highways, to universities, and all that hospitality. Area that's densely populated. There will always be a big, there's going to be a lot of people that's looking to stay in those areas. So those are the ones we're targeting, and obviously it's got a track record. It's quite pricey, the properties, because there's everybody wants a piece of those properties, but then it also keeps its value very well over the years. So properties close to universities. We only buy properties that's got a lot of potential still in it, where we can do some development work, or we can upgrade it, or we can increase the rental income for our investors. So we really put some sweat into it to get the best for our investors, and that's what we're doing. So we buy the right price, we convert it, and we rent it out, and that's as easy as the process is.
Joe, for people that are at home that are watching right now, and they're saying, well, we've had this Section 12J, and they're like thinking, but I don't have the money right now, and I've got a little bit of money. How best can you help those people? They're sitting on the fence. They've got some money, and they're like, I don't have all the money that I want to invest. Are you able to help them at all?
Well, yes, we can help individuals. We've got a special product where we can provide for our investors on a loan agreement, shares in exchange for the investments. So what this means is that if you're an investor and you're not happy with the 50,000, you would like to invest more, but you do not have more. So you can get a loan agreement from 500,000 to $1 million, and from $1 million to 2.5 million, and 2.5 million upwards. And with the 2.5 million upwards, we're only asking a 10% deposit. And between $1 million and 2.5, we're asking 25% deposit, and then we're also asking 50% deposit. If you want to invest 500,000 to $1 million, we can assist you with. We'll loan you 50% of the value of the shares. You only have to make a 50% deposit. So it's quite exceptional.
It almost sounds like, Joe, if you're investing anything from 500,000 onward, you are looking for a deposit of 250,000. That's what it sounds like, yeah.
Yes,
am I correct?
That's right. That's a minimum we can lend you. Obviously, we need to take into consideration we still need to buy a property. So we would have liked to lend you the full amount, but obviously we need to buy a property and we need to generate income in those properties. But the beauty about the whole system is, when it comes to the loan agreement or loan option, is that with your tax rebate coming next year, you'll be able to put that tax rebate that's coming into your account, and you can pay off your shares with your tax rebate. So you can use your tax money to pay off your shares, and your shares is equal to property. So what we're really doing is, you're paying for property using your taxes, and that's what everybody would like. It's a beautiful system.
Yeah, yeah. So your contributions out of pocket is very low here. I mean, you're getting the bulk of your money here from SARS, and you can put it in. It buys you some assets, and out of that, you're smiling for the rest of your life.
Yeah, no. If you invest a large enough total, then you'll smile because you'll receive consecutive years of tax rebates. So it depends on if you invested a large amount, you'll be able to get your taxes back next year, the year after that,
Right.
and possibly the third year. And you'll be smiling from year to year, and you're getting your dividends, and your assets is growing. You're just winning on every front. That's what it really is really about. But unfortunately, the only opportunity to get that right now is to invest in the next 30 days. And it's not because we say it ends in 30 days. It's because government has decided that this tax structure for you to get your rebates, is going to come to an end.
So here's the thing, ladies and gentlemen, right? So what Joy is basically saying here is that you got an opportunity to invest between now and June, right? And June is 30 days away. And I want to stress the fact that whether you're going to invest with us or you're not going to be investing with us, the train is going to go ahead. We are not the first Section 12J to have come through into existence. There's many Section 12Js. They are buying different things. We buy student accommodations. We're making money for our current investors at the moment, right? One of our recent deals that Joe closed off is our fund manager. He looks at the mechanics of the deal. Recently bought for a 1.7. The value on that property valuation is sitting on a 2.9. So obviously, by just looking at that kind of a deal, you can see that there is some good equity. Over and above that, obviously, there's some students that are paying rent, and we are also able to collect some rent from them. Joe, what is the returns that we are promising people that are going to give you money or invest alongside of us? Because investing is so important, Joe. People just don't want to invest with people. They want to invest with experienced investors like us, which we've been grinding for a while. We know which areas to invest in, we are out there buying real properties where people can come and touch and feel. So the money is not being eroded into something else. But over and above that, we're also buying assets that is giving us bigger equities. So it means more back for the fund and for the people as well, isn't it?
Yeah,
but what is the rate? What's the rate? What can they expect to get? Because I think that's, everyone that's putting their money, Joe, they want to know what's in it for me.
Yeah, well, TJ, again, it's all about the money. The properties is beautiful, and we only invest in properties that really talk to you when it comes to investing in them. But it comes down to the numbers, and you need that money to flow in your bank account every month. And that's why we're paying our investors a 7.5% on the investment per year, money that comes physically into the bank accounts. And the rest we're using and we're using it to buy more property. So what it comes down to is that the next year there will be more properties that's bought with your investment monies, and the year after that, and the year after that, and that's how we grow it. So we're looking at in total returns of about 17% for our investors, and we've done some calculations where we include the growth of the properties, the growth capital, and we get up to 27% for our investors. But obviously those are really, really nice numbers. But we've got a track record of achieving those numbers. So it's not just numbers we throw out there. We can stand by the dividends, and we can stand by the 17% as a very strong number, and also including the growth on our properties, we're looking at 27%. So those are the sevens. I think it's the 3 sevens is a good number to work with. 7% dividends, 17% for just as a comfortable figure. Obviously, we're going to achieve much more than that. And with our growth capital included, we're looking at 27%. So those are the numbers we're aiming to achieve. And currently, we've done that in the past, and we're looking to do it in the future as well.
Now, Joe, when you're talking about these investments, right? So how often will you pay out?
Yeah, so our investments we're looking to pay out on a monthly basis, but
Yeah.
obviously we what we need to do is we need to get our investments in now, buy the properties, renovate the properties. So we're only looking to start paying our investors on a monthly basis from next year. We're looking to pay from next year. I think we said in September thereabouts when the first cycle comes through from the university. So we're getting paid from universities, and as soon as we're getting paid, we just pay our investors the funds that came in.
Right. Joe, in an environment where we are right now, a lot of people are actually thinking that your student accommodation it's not safe right now to be investing in, and there's lots of online learning that has been introduced, and people are working from home. So why are we talking about student accommodation? And last week, this time, when I was speaking to you, you had visited some of our student accommodation. Um, and as a fund manager, your job is to do quality checks, right? To see whether the stuff is happening. It's not just about the money, but the stuff that's behind the money as well. What did you see when you were on the ground?
Well, yeah, teacher, my trip, I went to the properties in Cape Town. So there's quite a few properties there that we're currently renting out for students. Yeah, and I had a lot of conversations with the tenants, the managers managing the property, and a general feel for the properties and how the upkeep is of the property and the quality of the properties. So yeah, I can vouch for you that those properties are in very good condition and are being maintained well. So they definitely we're looking to do more of those, and we've got some of those in Potch, and I know you guys are managing some in Johannesburg. So we're really looking at properties all over.
Hmm, hmm. Yeah, that is encouraging to see that some of the properties that you visited, they're full. Where you are right now, we've got properties in Poch, and are they students in the places or not? What's the scenario there?
So all the units are full, DJ. So the truth is that you would like to be as close as possible to university because you always need to go and see your lecturer and speak to somebody at the university and we're providing such a nice service for the individuals. They get internet and they get electricity, and they've got a place that's being kept well and clean for them. So it's low. It's they are subsidized students, but they're getting so much more. So they're getting an environment where they can really learn. If they were staying at home, I can promise you that there's so many other things that can distract you, and so I think people have realized that these units being as close as it is to universities, there's a large benefit for the student. Not just all the services that's included in the packages for them, but also it's a learning environment. Your friend is living in the unit just next to you. If you don't understand anything about what you're currently studying, you can just walk around and go and talk to that individual. Obviously, we have got strict COVID regulations and we adhere to them, but and everything is sanitized, everything is clean. But you can go and you can speak to your friend. You can say, well, listen, you know what? I'm stuck with this question. I don't really understand what's going on here. And you can help each other. That's an environment where an individual can really learn. And so we're getting that all our units are full. People are seeing the advantage, even though it's distance learning. It's not really distance learning because you've got that opportunity to go into the university quickly to ask questions, and it's a learning environment. And a learning environment you can't get it everywhere. You can't get it at home sometimes, and that's why our units are always full.
Joe, I think you're missing a very important thing. And the most important thing that we need to be talking about here is that if you had to look at our demographics in terms of our markets or where we are in South Africa, it is still factually correct that not every household has fiber in their house.
Yeah, that's very true.
It's true, isn't it?
Yeah, and also the type of internet we're providing it's high speed, fiber internet to our students. Yeah, that's true. That's true.
The government has this program, the NSFAS program, where they issue out bursaries, and they don't offer bursaries to kids that are coming from houses that are elite, that are well off. They're giving bursaries to kids that are coming from really disadvantaged at the moment. Where there's a gogo who's staying there, whether there is a single mom who's staying there, she's working at Checkers today. She can't afford that university. But this guy now, this student has been given now a bursary to go to university. I mean, these are guys that we see every day, their stories. People that are coming through from townships and they're now going into universities. It's a reality in our communities that the people that I've just spoken about, whether it's black, white, Indian, colored, the reality is that at home, number one, there is no Wi-Fi. They don't know it, right? Gogo is probably on I don't know, Nokia 1520, whatever it is, right? It's a phone that doesn't even have Wi-Fi at the moment. Number two, if they don't have Wi-Fi, how are they going to do distance learning? They can't. I mean, the online learning stuff, they can't. So they're going to miss out, or the bursary is paying out, right? Number three, how do some of these students do their practicals? So how many of these students needs to go in for practicals? One of our buildings is very close to the medical school. And all of the guys that are staying there are first years, second years that are doing medical studies. Now, how do they do that when they're at home? So definitely they cannot. So where do they need to be? They need to be in a student race somewhere, right? And I think a lot of us, we sit in our suburban houses and we're like, student accommodation is dead. And we don't see that we are not New York. We don't see that we are not Milan. We are in Africa. You know what I mean? And in Africa, unfortunately, infrastructure is not what we all think it is, because we are staying in our suburb homes where fiber is now connected to our household. It's not like that in many of the houses in South Africa. It's a fact.
Yeah, right? That's true.
And that's a market that is still available to be served and serviced by people like you, Joe, who are in the M5 as a fund manager and deploying student accommodation into the different markets that we are in.
Yeah, that's very true, TJ. It's true, as you said, there's a lot of our students come from previously disadvantaged communities, and so we're not just about the numbers. There's always a sense where we would like to provide value for our students, and we're really looking after our students, because at the end of the day, they become our investors. So our students, after they've graduated and they've stayed in one of our properties, and they see how we manage the property, and they're earning their income on a monthly basis, those are going to become our future investors. And so that's why we look after those students, very carefully, because they are the future, and they will become our future investors again. So we're just completing the circle. So we're helping them, assisting them where we can for them to achieve their goals and in getting their education and degrees and complete it. And at the end of the day, we'll see them come back for investing in our houses again. So it's definitely a circle. Yeah, we are looking after those individuals, definitely.
Awesome stuff. Joe, I don't want to hold you back. It's in the evening. I'm sure that we've covered everything else that we've spoken about. But if someone wants to exit the fund, this is my last question to you. If someone wants to exit the fund, how do they do it? I've heard about this 5-year thing, but I've also seen that you speak of this exit. People want to know when they invest, can they get out, and is it difficult or easy for them to get out?
Yeah, well, TJ, to answer that question of, when an individual, after he's invested in a fund and he gets his monthly payout, it will be very hard for that individual, just that, my experience is that they won't exit the fund because they're getting a nice cash injection every month. But if something happens and they would like to exit a fund, and we don't see that happen a lot or very often, obviously we'll do assessment of the value of the shares and independent assessment, and we'll pay that individual for that independent valuation. So we'll pay them out of the fund, obviously and the fund will just take over that shares again. So we'll keep it in the fund. You know what I mean? We'll grow the fund, and that individual can exit by way of getting a capital payout if he wishes to.
Before I go, Joe, someone says here, what if someone dies? What happens? They're asking the question there. So you invest today, they're in year number 2, and Jesus says, come home, then what?
Yeah, teacher, I had this question this morning as well, when one of our investors asked the same question. So what we say is that every individual has got a responsibility to have a will and testament that he needs to have ready. If you're earning money and you've got a family to look after, if you've got any dependents depending on you, and you're building assets, because that's what it's really about, building assets for your family, you need to have a will and testament. And in that will and testament, it's very important to say what will happen with your assets. Obviously, executor of a will will contact us and say that the following assets has been reallocated, and then for that reason, we'll follow the law and we'll reallocate the assets, the shares accordingly. Obviously, it's a process, but death happens to everyone at the end of the day, and so we do assist where we can.
Awesome stuff. That was Joe, and Joe, he does all of our fund management, and in the group, he is the fund manager. Like I normally say, he took the test, I didn't. So Joe, thanks very much for your insightful conversations that we've just had. And ladies and gentlemen, this has all been to ensure that you can understand what the Section 12J is all about. We've spoken about how much you can invest, what is the minimum, what is the maximum, who can invest, you, partner, a business, yes, you can invest, and what the fund itself is going to be investing in, and over and above that, how best can you get your money out when you are done with the fund. But Joe, he's of the view that once you start getting your proceeds from the fund, Joe thinks that he can get you hooked, right? And that you will not be able to move. And you'll enjoy staying in the fund, obviously. And that's what it's all about. And this is why we say M5 Property Addicts stands for legacy, creating generational wealth. And we do that through real estate. And if this has been of good information to you, in the comments below, give us your comments. What is your thoughts? And if you're wanting to invest, there is a link that you can follow, and follow that link. It literally says join M5 Fund. Join M5 Fund. It's in here. And for the guys that are just joining us, thanks very much for joining us. And ladies and gentlemen, this is not the end. The end comes in 30 days, 30 June. But from now on, happy investing. We'll see you in the next video.